And that's the key takeaway when people say, like, let me go 50% in cash. I always go, how do you know it's 50?
Yeah.
Are you timing the market for the next market downturn? You personally. You timing it? You think the market's falling?
I do think the market's going to fall.
Okay.
I think there's got to be some sort of pullback. I could be wrong. I've been wrong many times in my life.
You can use the option market. You can look at it and see that the probability of a 10% decline is greater than a probability of a 10% rally. And people that look at that go, okay, then I'd like to slow down some of my portfolio. But how much do you slow it down? Most of you don't know. And yes, I'm picking on you because most people go, I'm going to move, 30% to cash, 50% to cash, whatever. No. So here's what we're going to do. We're going to look at the Savertons here, Sean and Becky Saverton, right? They have a whole plan done, right? So we've done this whole thing for them. They're going to be very successful. Everything that they want to do, we're going to be able to achieve. Check this out. We go on over here to their investments and we find out we need to be 60-40. This is a really simple way of saying this, but we need to be about 60-40 stocks and bonds, cash, etc. They're currently 85-15. So their question is, Dustin, I hear you talking about the market being overbought, every sector being overbought besides utilities, and gold being overbought. Everything's just, Japan finally not overbought. So I want to slow things down. Okay. We know from their plan that we have room to pull some skin off the cat. I don't know.
Skin off the cat.
Pull some meat off the
cat
bone.
Lovers are going to be like,
yeah, I don't know what to say there. That was a whole mess up.
Yeah.
Not intentional that time. So they can slow down. They can time the market. Yes, you can do it, right? But we know that if we go towards more like a 60-40 kind of a setup and the market just grinds a little bit higher, their whole plan is still successful, right? A few less dollars, we'll have to figure something out, but they're not going to lose out on their plan. And that's the key takeaway when people say, like, let me go 50% in cash. I always go, how do you know it's 50?
Yeah.
Why is it not 55, 60, 40? What is it? And that's the best example to give for that, is somebody that has their entire plan worked out there.
well, and taking into consideration that, the cash showing in a plan oftentimes isn't going to account for currently, cash is getting 5%.
Yeah,
but
can be.
The market, the interest rates are going to come down. We know that. Yep. And, you want to say, okay, I want to pull some to the side. Some people like the idea of bonds and, okay, well, I'm going to buy some bonds and go out there. I'm going to get a little bit higher of a rate. The problem is if you buy the bond, you set in the fixed rate, that's fine right this second. But what if the market falls and then you want that little bit of, the dry powder to go jump back in the market? Yep. Well, now you've got this bond here. You're kind of in the market with the bond because it could be selling at a premium, could be selling at a discount. You don't know what the bond's going to do at that time. And so I love the idea of this and I love this strategy. It's not for somebody who's 30 years old who's, saying, hey, I want to jump in and jump out. But somebody who's retired who's really trying to control their chest pain because, you're 85-15 on the market and the market does have a 15-20% pullback. Man, that's going to create some pain there. But knowing, hey, I've got cash here, number one, to live on. But number two, I have cash now to buy back in. This is a great opportunity.
Yeah, think about what's going to happen here. We move the Savertons to more of a 60-40. The market will pull back many, 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 many more times over their lifespan. Yeah. So this next go-around, they will fall less than they were going to fall. And technically, unless this was 2022 again, they would fall less than the market falls. So if at that point, even if their timing is off and the market falls 8%, then we make a change and now it falls another 3 or 4%. It doesn't matter. They fell less than they were going to fall, so their account balance is going down slower than it would have. Okay, we can be more aggressive then when things are cheaper and that, hopefully that works out. This is what mutual funds do. So everybody's like, mutual fund, how do they decide what they're doing? All these big hedge funds and stuff. While the average retail person is interested in the growth, I want to beat the market, I want to pick the best stock, whatever, the fund managers are saying, how do I fall less than the market? Because if I can at least match what the market does on the way up, but fall less on the way down, I have outperformed the market over the long term. That's the approach. So us retail people are picking SMCI, we're picking all the hot stocks and stuff, right? AI, this and that. Right now, the hedge funds are going, how do I slow this down a little bit, right? I don't want to fall as much. That's the ticket.
And playing, the other side of this, you're going to get upset if you go to a little bit of cash and the market continues to run up. But on the other side, the market pulls back, you're going to be really happy. I've yet to meet anybody who just says, I'm okay. I'm okay that I did this and the market's up 10% from there. But just because, we all want to take the opportunity to make as much money as possible and when the markets are hot, but we also don't want to lose when the markets are bad.
Yep.
And that's just the emotion of investing. And so we've got to really figure out how do we manage that emotion in investing, because people, I keep going to this where people, take the emotion out of investing. I get it. But we talk to enough people to know it's nearly impossible to take emotion out of investing.
Yeah.
Whether it's, we're managing your money, that's one thing. But even our own money, we're investors. We get it.
Oh, yeah.
I don't want to see my money go down.
I joke that I'm dead inside, but like taking the emotion out of investing is like recognizing when your wife got a haircut. I mean, you're like, oh, did she, didn't she? Like, it's so tough. And you can't say, did you get a haircut? Because then if you're wrong, like, it's a whole thing.
My wife's like, I got 3 inches cut. And it's like, but her hair's like to here.
No.
And it's like, if you get 3 inches, it's to here. It's like,
yeah.
I just don't see it.
Now, if it was 8 inches, I know what that looks like. So we're going to, we figure that part out. But it's the same thing. Like, you can't get rid of it. So that's the part that you got to be okay with. And somebody's going to say, one of you is going to say, yeah, but if it goes up 10% and then it falls a little bit, am I buying back higher than where I would have sold? No, this is like back to basic math. Your average cost will still be lower. And that's the part people, you're going to buy up here anyways, even if it pulls back. No, look at your average cost.
We got a couple things for you. So first little clean joke. What did Spartacus say when the lion ate his wife?
I don't know.
Nothing. He was gladiator.
Oh, nice. Illuminati. Yeah. Okay. I'm going to keep pointing that out.
All right, man. So I got a little something for you.
You got a good one?
So I got something right here for you that we're gonna jump right into. We're campaigning for clients. I want to show you.
Is it my turn?
You did a little hit piece.
Oh.
So get ready for this one, man, because it's gonna be ruthless.
Bring it on. Bring it on. Let me see.
Dustin Tibbetts is not a real leader in finance.
Bad picture.
A real leader in finance would never swear on a live show. Dustin Tibbetts definitely has.
F***ing is down 67% in the United States. In the U.S., almost nobody is f***ing anymore.
No, that's
Isn't that incredible?
A real man in finance doesn't need a step stool for the
but that's
closing
not
bee.
true.
Dustin Tibbetts definitely does. Eric W. Powell is a real leader in finance. Eric Powell, a leader with a servant's heart, having served his community as a firefighter for many years. Eric W. Powell doesn't need a step stool to record his videos. Eric W. Powell, a family man who loves a dad joke and would never have to be censored on his own channel. A vote for Eric is a vote for decency.
Hey, your logo is awesome, by the way.
Kevin created that.
That's really good.
That looks sharp.
That's
Throw in the middle initial W. Like,
Yeah.
It's just like, wow.
that's probably one of my favorite pictures.
That's a solid throwback picture. There.
I
Chris brought that in and just was like, I don't know what you guys want to do with this, but here you go.
I may have a few of his then when we do his hit piece, just so you know.
We may not do a hit piece on him.
Yeah.
Really?
Well,
I just
they
feel
don't
bad
know
for
him.
him.
Yeah.
I feel bad for him.
We should
He's just getting started.
We should totally dog him. Okay. Yeah, that was good. Let's air it. Let's put it on the close.